The markets are at all-time highs. Should I sell? I've had this stock and it's done so well. Should I sell? I've had this stock because I inherited it from my parents. It's done so well for me. It's been part of my life. Should I sell it? I mean, we're at highs. Or perhaps you're saying, I own this stock and it's been a dog. I'm holding on because as soon as I sell, it's going to go up and it's going to bother me. Speaking of bothering me, let's bring in my co-host, Tony Shore.
Ouch,
Welcome, Tony.
ouch, Dan. Super hurtful. Super hurtful.
Yes, I know. So, Tony, I'm sure you're hearing this. This is November 2025. We've heard even our President Trump say, we've hit 48 new records. It's all me,
Sure.
Um, the market's going up. Gold is up at all time now. Should I sell my gold? What should I do? Are you hearing this from people?
Yes. Yeah, I am because people think, people see unfortunately, I also hear the opposite. The markets are going crazy. I need to buy, buy.
Yes.
I think
Yes.
that's a sentiment when the markets go up. People think, man, I need to buy some of this stock. I think that's the wrong, but I do hear people think, oh, it's high. You're always telling me we should buy high and sell low, or sell high and buy low.
Yeah.
Maybe now is my time. So, and I have heard advisors say, hey, the market keeps hitting all-time highs. Let's capitalize on some of those gains and move it into safer money options because that way you have some principal protection and you won't be pulling it out when the market is down when you're in retirement. I hear that.
So,
I hear
yes,
that
lock
argument.
in the gains. Lock
Yeah.
in the gains.
Yep.
Protect it.
Yeah.
And this is a show that's focused on retirement. So a lot of retirees watching, and you might be watching this saying, yeah, I am retiring soon. Should I sell now? The market's at all-time highs. There's two things. Well, I want to introduce a concept that I don't think a lot of listeners are aware of. I doubt you're aware of, Tony. I'm just kidding. I wasn't really aware of this, but I want to introduce it to everybody and explain how this might be the one thing holding you back from making a change in your portfolio if you think there is a need for a change. And also a tip on how to deal with it. But before we do, I want to talk about this FOMO, fear of missing out, versus loss aversion. So, Tony, I have a feeling you lean more toward loss aversion than FOMO. Am I right on that? Are you more?
If we're talking about finances and my own money,
Yes.
yes, I am more risk averse than I am FOMO. If we're talking about spending money on records or getting the latest release or making sure I don't miss some limited edition album that comes out, then I am FOMO and not at all risk averse.
Yes. And
Yeah.
a lot of listeners are probably have that same type of thing where certain things they have the fear of missing out, others their loss aversion is strong. And when it comes to investing and retirement planning, the loss aversion is usually stronger. There's a
Right.
what they call an emotional asymmetry,
Mhm.
and that's just because, generally speaking, and scientifically proven, psychological pain of loss is greater than the pleasure from gain. So I often use that for people that start working with me, and they're like, "Okay, we're going to make a change to the portfolio. We're going to invest in this, or we're gonna put some off the table. We're gonna put some in cash." And I say, well, if this particular investment were to go down, how would that make you feel? Think about that. And they think about that. And then I say, if it went down by 50%, would you be upset? Well, yes, Okay, now let's flip it. Let's say it goes up by 50%. How good would you feel? Oh, I would feel great. Which one would you rather feel? And obviously, people say, I want to feel good. I want it to go up. I said, well, which one is more powerful? And what it comes down to, a lot of people say, yeah, a lot of people feel that pain hurts so much more than the pleasure, because the pleasure is fleeting,
Yep.
but
I
that
would
pain
say
seems
that.
to hold on forever.
Yes, I would say that for sure. Yeah, the loss, the pain of the loss is much greater than the joy of the gain.
Yeah.
And I've
So
seen study after study will show that psychologically, typically that's how it works.
right. So now I want to introduce a new concept, Tony, because this one we know about. People get fear of missing out. If I sell now, it's going to skyrocket, and that'll bother me. The loss of opportunity is also painful, right?
Yeah,
I
opportunity
missed out.
loss, but I don't think people think about opportunity loss as much as they think about as with their money now. We're
Right.
talking about finances and retirement funds and savings. Think about loss of actual principal or actual money. Yeah,
Well, it does keep people in positions that are losers. They hold on to something that's a dog because, man, it's going to come back. And as soon as I sell it, as
yeah.
soon as I let go, the world is watching me. The
That
world is
Kodak
waiting for
stock,
me to log
it's
in
gonna
and
come
sell.
back. It's gonna come
Yes,
back. Kodak will go
right,
from
right.
physical camera film to AI. I just know they will.
So, Tony, I'm going to ask you. I want to bring in a new concept, new to me or to a lot of listeners. It's called the endowment effect. Richard Thaler wrote about it in 1980 toward a positive theory of consumer choice. Have you ever heard of the endowment effect,
No,
Tony?
you were right. You definitely knew I hadn't heard of the endowment effect.
So, you know what it's time for then?
What?
It's time for,
And now, a moment of reflection.
yes, Tony, a moment of reflection. So, for the viewers, you saw that. But for the listeners, you saw a video of Tony looking in the mirror and it turning into me. So, I want to reflect on a couple of things about myself. But before I do, I want you to reflect, Tony, in order to illustrate the endowment effect. I want to ask you this. You mentioned already you have a lot of records, LPs, whatever you want to call them. You have these plastic discs that hold music, right?
Vinyl. Yep.
Vinyl. If you um let's give me a random you've owned some of these since the 80s, I'm assuming, when this
Yes.
endowment effect was first introduced.
Yes.
How much do you think you paid on average for those vinyls when you bought them?
It's vinyl. The plural of vinyl is vinyl.
Vinyl,
Everyone
see?
says but people
Vinyl
nowadays,
records.
especially, now a lot of people say vinyls, which is, oh, it's like saying
I
ice
didn't mean that.
creams.
Yes.
No, I know you didn't. You're just trying to get
Oh,
under my
good point.
skin.
I love it.
I want a T-shirt that says the plural of vinyl is vinyl because so many
Love
people
it.
say that. I have a lot of vinyl, or records, but yeah, I don't know. That's really hard to quantify because
I know it is, but
back in the 80s when I started collecting, actually in the late 70s, I got my first stereo and record player in the 70s. But I would say they've gone from $5 each in the $6 each in the 70s, to now some are
oh,
40, $50.
okay. Okay. Now,
So the average, I
okay.
don't know, is like 10, $15 maybe.
All right. So let's call it $10.
Yeah.
Let's say you average your vinyl
Yeah.
is $10.
Yeah.
Okay. Now imagine, Tony, that those vinyl records are going for $200 each right now, today. So anyone that wants to buy those records has to pay $200 per currently. Would you sell all of yours?
No.
You would not sell them.
No.
Would you buy a new record at $200?
Probably. I hate to admit it. I shouldn't. No. I mean, it's not worth it. They aren't worth that. Most of them. I have records in my collection that are worth $500, but right now. But as far as if every record out there was $200 minimum,
Yes.
so if you wanted to get any record, you'd have to pay that. I'm so
Yes.
addicted to new records, or if I really wanted something, I might save up for it. Right now, for an average record, that like a new release, would I pay 200? Oh no, probably not. But I mean, I probably still would if Yes or John Anderson came out with a new release. I'd have to get it because I would be
Well,
afraid
'cause
that
of
if
this
they
emotion.
didn't,
We could see clearly the emotions. You can't
yeah.
just answer simple questions. You're digging deep, thinking about it. I can see you just smiling about this because this is emotional for you.
Uh-huh.
And that's the point of the endowment effect is the endowment effect says investors place a higher value on assets they already own compared to assets they don't own.
Oh, for
So,
sure. You see that with garage sales. Sometimes, or
yes,
people on Facebook Marketplace when they have a dresser. Some people realize that they have the same dresser. I will see the same exact dresser or quality. Somebody said free pickup, curbside pickup. If you need a new dresser, I've got one I'm not using. It's in great shape. Pick it up free. And then you'll see somebody else with the same dresser, $300. When I bought it, it was $600 and it's still in
right.
great shape. People always think their stuff, I'm using the word stuff, is worth
Yes.
more than it. People typically think their belongings are worth more than they are.
Exactly, and that's called the endowment effect.
Yeah.
And they've done studies on it about this. They've done ones with lottery tickets. The original in the Thayer in the '80s was a mug and a pen at college. I forget which university it was. So people feel that their assets are worth more than they are really. So going back to the original question to you, would you sell at 200? Would you buy at 200? You're like, you hesitate.
Yeah, no.
Right? Well, you wouldn't. You wouldn't like you maybe a special one release, but then that would be it wouldn't be 200. That would be the $400 record because that's the special version, right?
Sure.
So why wouldn't you sell if you wouldn't buy it at that saying that's way overpriced, then why wouldn't you sell them? Right? Now it's tougher for you in that scenario because you actually use and listen to the music, right? I
Right.
get that. But let's talk about it for the viewers
From an
that
investment
may not
standpoint, if it was
from
just
an
an
investment standpoint.
investment, I
Yes.
would probably be tempted to definitely sell at 200 if I knew, wow, this is really high. I would never buy them at this price. It's more than I paid. It's way more than I paid. So I'm going to cash in and get my value out of them and make some money off of it.
But markets are at all-time highs, Tony. I bought that stock at IPO and look at it go. I'm not selling. So I'll go back to my own reflection because it's only fair that I picked on you, but I talked about myself. In the '80s, I bought Microsoft stock, believe it or not. Instead of getting cash gifts or a watch, I think it was my mom, I asked, "Can we buy Microsoft?" And they didn't know what that meant. So we had to go and use a broker, which family, and we were able to get it. And I reflect back on that and say, "Man, no, I don't own it anymore, by the way." I sold it to buy my first car. And had I held
Whoops.
on to it, it would be
Whoops.
worth a lot more than that car. I did it again.
Yeah.
I did this again. I said, "Oh, I'm grown up now." And I bought Google when it IPO'd. And I said, "I'm going to hold this till I die because I screwed up the Microsoft thing to buy the car." Then what happened with Google? The housing market crashed. When I moved to Florida, I had to sell my house at a loss. So I had to come up with money. So I sold my Google stock. It did well. It was able to get me out of that. But had I held on, boy, oh boy, again, I getting emotional about it.
Yep.
And so
You know what you should
what do I do?
have had managing that money? You should have been working with a trusted financial services professional, Dan, to keep you from making those emotional decisions. You'd be in a lot better. Oh, sorry. Wait, that's you. Okay.
Life happens, Tony. Life gets in the way, even for my clients, they come to me and say, so going back to the question of why wouldn't you sell? That's the original question of this podcast. Should I sell now? The markets are at all-time high. And the decision shouldn't be based on what you've always done. It shouldn't be because you inherited IBM stock or whatever, Kodak, like you said, that made my grandfather, comfortable in retirement. I own it. I'm not selling it. I bought it now. I bought it at IPO. It's up so much. Why would I sell? I can't sell because as soon as I do, it's going to go up again. Right. Or a lot of people, they have the losers that they're holding on to, and they're holding and clinging on to that. And so I used to trade. I was a trader. And I vividly remember my mentor, John. If you're watching, John, hi. He said to me when I was trading, and we would hold short term, we're day trading, very short term. And he would look over, and we were making hundreds. I was making hundreds of trades. A lot of guys were making thousands of trades in a day. And it would be quick. And every once in a while, I'd be frozen and I'd be waiting. And I would hear John say, if you didn't own it right now, would you buy it? And that's the tip to ask yourself whether or not you should hold this thing. It's if you already didn't own it, would you buy it now? Which is really tough to do because you have to eliminate the fact that you own it from your mind. So, Tony, if you didn't own those records now, would you buy them now at $200 a piece? Or even at current market value?
Not a lot of them. I mean,
If
yeah.
you're right, you wouldn't. And so then why don't you sell them? And so that's the question you have to ask yourself when you're in the market. Because the answer to you, listener, isn't sell now because the market's. I don't know your situation. Everyone's got a different spot. But if you're struggling to make a decision because you haven't, you're not sure what you should do, ask yourself, if I didn't own the market right now, if I didn't have 100,000 invested in my 401k in the way it is, and I just had 100,000 cash, would I invest in the stock market right now? And if the answer is no, then why wouldn't you sell? Why wouldn't you?
I see
Right?
what you mean. Yeah.
So you have to look at it in the current context and say, that's the question you got to answer. But it's really tough. This is a really tough one to answer because a lot of people say, I don't know.
But
And
as a
why are they
financial
saying that?
but as a financial advisor, Dan, wouldn't you advise people to um uh what's the phrase we used at the beginning of the show? Lock in gains.
Yeah, diversify or take some lock-in gains.
Yeah.
Maybe if they're retiring in the next
I mean,
year or
it
two,
doesn't
maybe
do you
that's what
any
you
good
do.
to invest in the market. It doesn't matter if the market goes up 20%. You haven't actually made anything unless you lock those gains in and sell and then reinvest at some other point or in something else, right?
Correct. Trying to time the market's not going to work, but
Yeah,
um,
that's the problem there.
making the
If you think
decisions.
you're going to sell when it's high and then wait for it to go down and then buy again, that doesn't always work. And so
No,
if you
it
wait
doesn't.
too long
It
to get
doesn't.
back in, then you're in trouble and you miss another upswing. So
And trying to time the market is a fool's errand. And to try and get it just right's not going to work. Maybe it does once in a blue moon. But what you could do, Tony, is what you're just describing. Take some profits off the top, sell a little bit. What you're doing is you're guaranteeing you're not going to time it perfect. You just guaranteed you won't time it perfect because to time it perfect, it's all. You sell it all at the top and you buy it all at the bottom. You
sure.
can't if you're selling pieces here and there. So what you do for retirement is you plan it out, have a portfolio, and it should have a purpose. And we've done
Mhm.
shows on this, countless shows. But I wanted to bring up this idea of the endowment effect, how it could be stopping you. And so the answer is ask this question. But if that can't be answered by you, you got to take the emotions out. So that's when, yes, you made fun of me. I should have had a financial advisor said, don't do it, Dan. Hold on to Google.
That's
But
what
then
you do
again,
for people. That's what you do for
that's
your
what I
clients. They
do.
come in all emotional. What should I do? And you look at their situation and you
Correct.
will then help them answer this question. Our listeners and viewers might be saying, well, he didn't tell me what to do. Well, no, because Dan doesn't know your personal situation. And you don't like giving blanket advice because one person might want to sell half of what they have right now while the market's up. Another person might not want to sell anything based on their personal situation or time horizon, right?
Right. And what I'm saying is a lot of people have trouble eliminating the emotion from this decision. And that's when you should get outside assistance to do it or come up with rules and just follow the rules. Because once you start getting into, well, this one's really doing well, or this one stinks, I'm not selling it because I'm going to buy more as it's going down. It's it gets very tricky. And just remember that you value what you own more than if you didn't own it, just remember Tony's records. He bought them for $10. I'm giving him an opportunity to sell them for 200. He won't. But he said, okay, then I'll sell them to you for 200. I'll sell them to you for 190. He won't. He'll be like, no, it's only worth 40. You see, I know I'm picking on you, Tony, and it's different than stocks because there's some utility to your records, if you want to call it that. There's some utility to the vinyl. I mean, you can just listen to a cassette recorder and get the same sound quality, I think.
No.
But I'm poking buttons because you're emotional. And so the only way to make that decision is to take the emotions out of it.
Yep.
When people pass away and they get estate sales, like you said, people sell. A lot of times the children that inherit the stuff from the parents that they didn't want, it's like, get rid of it. How hard was it for the parent to get rid of it? Almost impossible, right? Emotions.
Yeah.
So investments, whether to sell, whether to buy, where to put it, should be part of an overall plan, an allocation plan. So you got to have that. Even if you have it, it might be difficult to actually do it. I'm supposed to have 70% in the stock market. I only have 50. We agreed that 70 was appropriate. I need to buy 20% more. Market's at all times high. I can't do. Or the reverse. I need to sell some to take some profits, but it's going so well. I don't want to miss out. You got to get the emotional biases out of it. You have to. So it's best to be independent and neutral. And if you can't be independent and neutral, you got to find an independent and neutral party. Get someone else in there.
A financial services professional, Dan Wynn.
Yeah, right. And just for an unbiased opinion, hey, I think you should sell. That was what I would do based on this and that. I do that all the time. I tell people to get rid of that. No, I can't. I'm like, well, why not? And then I poke a little deeper, and there's some emotional bias that I don't have because it's not my money. It's theirs. And maybe that sounds cold or heartless or unemotional. I say it's stoic. It's not emotionless. It's focusing on what's important. And the important part is having a plan and having it fit in the plan. What's not important is trying to get it right 100% of the time or having an emotional attachment.
Yeah.
That's it, Tony.
Wait, one more. I have a conclusion. You did your conclusion. I get one conclusion quickly before the end of the show.
Fair.
You taught us a lesson. The lesson I brought today for you and our listeners is that the plural of vinyl is vinyl. There is no such thing as vinyls. If people could just take that with them and
all right. If you disagree with that, please comment on the video below. We'll see if anyone dares to cross Tony on his expertise. Tony, thanks again for a great show. We'll catch all of you next week.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.